Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine. Good morning, everybody. Hold on, I didn't turn on the lights. I tried really hard to be on time here, and I was just a little bit late, so I apologize. We are getting retail sales here, and it was higher than forecast. So one of the things that you get, if you're not familiar with the retail sales number, Bank of America uses credit card information to kind of calculate what they think retail sales is going to be. And historically, it has been very predictive of what the number is going to be. It's kind of weird that it tends to perform better than the analyst estimates for some reason, but it continues to do so. And so here today, the retail sales month over month, well, the headline number was spot 4 versus an expected spot 3, but the core number was spot 5 versus an expected spot 1. So when you do sales and you take out auto and I forget what the other one is it foodstuffs? I forget. But you know, you take out the more volatile ones, and economy's running stronger than anticipated, and so the market's selling off pretty hard on it. Now the other question, we don't want to make the mistake that we made last week. What's the initial jobless claims? 241 versus 259, so slightly better than expected, but still pretty high. 241 is still relatively high. So we got a pretty strong push down. I do see some reason to maybe retrace a little bit of it, even though I think that the overall trend should continue to be down. Let's come over and look at some of our longer run charts here, shall we? Okay, so here we are on the treasuries. Well, okay, so we are retracing some of the upside action from earlier in this week. Not anything super huge yet, but it does look like, oh, here, just as I'm talking, it looks like they're heading for another low. Also, keep in mind we have the ECB press conference this morning. Okay, so that's another thing that's we're going to kind of see coming in here in a second. S&P 500 looking pretty good overnight there. So remember I said I bet you that we'll probably have an up day yesterday? Oh, and we did. Look at that. But I didn't expect us to retrace the move in the overnight. We have retraced the move. Okay. Oil's still down after some of that risk premium came out. Gold and silver looking pretty good again. Gold could be ready for another breakout. Like if they get above 2,700. Kappa's still down, so China's still kind of not wowing people enough. And the Japanese yen, oof, that's another little down move in the Japanese yen, and the dollar is back to 103.37. We're kind of outside the window now. We have to come like all the way out here to the daily bars before. Okay, well look, we're a long ways away from where we were at the end of the summer when the carry trade kind of blew up. But look at how fast the dollar is coming back there on a daily chart. And last and certainly least, I'm sorry, I'm not a fan of cryptocurrencies, but they had a good day yesterday and they even extended it a little bit overnight. I have been unable to find any kind of information to explain why Bitcoin is popping off, but it is popping off. Okay, so, or here, I do kind of think that we should get a deeper pullback than we've had, even though, like, it might be a deeper pullback and then new lows. But I think for me, that puts me in a situation where I personally don't want to trade this. Because there's like higher probability of random moves and kind of like people getting, what do you say, like, jostled out of positions. So I, have a little bit of oatmeal here. So I'm going to eat that. Let's just kind of watch and see how it goes here for a little bit. Well, 0.5 half is a little bit better. That, I guess, is kind of a VWAP bounce, isn't it? All right. Oh, why did I do that? There we go. Interestingly enough, not as much of a change in the yield curve off of this move. I'm kind of wondering here, like, does the yield curve not moving as much on that kind of increase the probability of, like, retracement? I would have expected it to move a lot more than that. Oh, you know what? Maybe it's because of the press conference. Well, we should pull that up. Let's pull that up. Time for Orange Lady talk. Is it really because they use a fake tan? Like she uses a fake tan, Donald Trump uses a fake tan? I kind of think that maybe it is. Although I think with Donald Trump, some media outlets intentionally exaggerate it, but I mean, with Donald Trump doing it, I'm just kind of like, well, you know, he has maybe some narcissistic thing. But then when she does it, it's like maybe like there are some biases and stuff, and it's to your advantage to not be so pale. Like, you know, would Donald Trump have done as well as he has if he didn't do his crazy comb over? If he just shaved it off and went bald like me? Is that my problem? It's because I'm bald, isn't it? Oh well. I wouldn't want to deal with hair like that. Thank you. By the way, did you guys watch the Kamala Harris interview on Fox? I've only seen clips, but the internet reactions were a little curious this time. Republicans thought that it was a complete disaster. In fact, some Republicans were like, this is the end of her campaign. But Democrats seemed to be happy and were kind of bragging about it too. So what did you guys think? You should chew the F out of that oatmeal. Yeah. Well, it is crunchy oatmeal actually. Yeah. It is steel cut oatmeal. It's like instant steel cut oatmeal with like little chia seeds or something like that in it. So, yeah. I try and chew out all the little seeds and everything. Really good. I tried to chew my food, like especially salad, man. I eat salad. I really try to grind it into a fine, because otherwise my gut gets upset. And apparently it's a thing that like you need pressure on your upper palate and stuff like that that a lot of the reason for like the issues that we have with our teeth and all of that is because our food is too soft. So yeah, you had a bowl. Well, it was probably like Quaker oatmeal, Quaker instant oatmeal, right? If it's instant oatmeal and you put in a little bit of extra water so it's really extra soft, then that stuff you can just like swallow it, right? But for me, if you have a piece of fiber in that food that's gonna like scratch the walls of your intestines, that really, really agitates my ulcerative colitis. So I like to have food that is tough, but then I really chew it. Flax seeds, you're right there, flax seeds. I also, yeah, I was kind of getting into this. I didn't include a lot of it in my video, but I was thinking about it a lot when I was writing it. Because one of the things about intuition is it is like building, physical structures in your brain, and so things like proper nutrition, sleep, etc., are really, really important. And especially those things that will specifically help the brain, like getting the fatty acids and good fats, but also fueling your brain. And one of the issues that I think a trader can run into is your brain is like 60% of your energy expenditure or something like that. So the brain uses a lot of energy. And especially if you're doing stressful stuff and analysis and all this thinking and everything, you use a lot of brain energy, and that is carbohydrates. And so if you don't get enough carbohydrates, it's going to hurt your performance. You're going to get headaches and all of these sorts of things. But the problem is that how do you get those carbs? And so a lot of people are going to turn to refined carbs like bread, things like that. And it doesn't last very long. It spikes your blood sugar. It causes all sorts of other problems. So you have to eat a lot of carbohydrates, but you have to eat good quality carbohydrates, ones that are difficult for your body to break down, like, whole grains, wheat bread, those sorts of things. You must have absolutely zero. You talking about like me because I'm so skinny, or because are you making a larger thing about don't eat carbohydrates? You prefer to eat animal food? Wow. I'm just telling you, your brain uses a lot of carbohydrates, man. So like these diets out there that are like, only eat meat and protein. Okay, those diets are for meatheads. Okay. If you're thinking, you need the carbs. If you're a thinking person, you need the carbs. You will use more energy and you will use more carbohydrates simply from the act of trading. Like, serious. It's crazy how it works. And if you're a person that's doing manual labor all day instead, well, they need carbohydrates too, but it's much, much more important for them to really maximize the amount of protein that they're getting, right? For you, well, you want to have protein, but the thing that's going to be hardest for you is getting quality carbs. because if you get enough carbohydrates, you're probably going to get it from poor sources. You're going to get it from junk food, and you're going to get it from bread and sources where it breaks down almost immediately and then spikes your blood sugar, right? So it's a real challenge to get carbohydrates that are not easily broken down. Basically, you need low glycemic index carbs. Yeah. See, the problem is not it's such. I mean, there's some really interesting research coming out about this stuff now, because they've kind of found that there's a certain amount that the body wants to burn. So, like, if you sit around, you know, how is it that somebody that sits around in their desk all day ends up using the same amount of calories as somebody that has to walk around all day and forage for food? Well, it's just the way your metabolism works, that it has a certain amount of energy that it wants to use. And so that's part of why we have like problems like losing weight and things like that. But the reason that we have such health problems in the West, in my opinion, is it's too available. Like the sugar is too available. There you go. Tom Gunn has it right there. Fruit has a fiber which balances the insulin spike, right? So the key thing. So here's something that I've discovered, and it came from somebody on the stream too, by the way. I can't remember who it was that told me to do this, but it totally effing works. Okay, if you don't have quality carbohydrate sources, but you feel like you need the carbs, like for me, if I don't get enough carbs, I will lose weight. I will get headaches. It's crazy, and I can lose weight quickly too, believe it or not. I've lost like 10 or 15 pounds. What you do is you take that carbohydrate, but then you have to combine it with something that slows the digestion down. So in particular, you want fiber. So like take psyllium husks with it, for instance, right? And the fiber kind of gives a different signal to your body, essentially, that slows the digestion down. So, my news squawk says that LaGuard is already going. No, this isn't right. I've got the wrong thing. There we go. Now we're live.
Should be aimed at making the economy more productive,
Voice news disconnected.
competitive and resilient. That would help to raise potential growth and reduce price.
Yeah, nothing too important. We do gotta listen to her because you are gonna see moves here in our markets.
With concrete and ambitious structural policies on Mario Draghi's proposals for enhancing European competitiveness and Enrico Letta's proposals for empowering the
So yeah, you've got to get, anyways, I'm just telling you got to get the good quality carbs.
framework fully, transparently and without delay will help governments bring down budget deficits and debt ratios on a sustained basis.
Oh, I missed Uzi's comment. Do you have like a routine, or do you deeply and critically analyze all the mundane facets of simply being alive?
For fiscal and structural policies.
I deeply and critically analyze all of the mundane facets of simply being alive.
1.7% in September, its lowest level since April 2021.
What I did was I deeply and critically analyzed all of the mundane facets of being critically alive, simply of being alive, over a period of 10 to 20 years. and optimized my routine slowly over that time until I got a really well optimized routine.
Inflation edged down to 3.9%. Most measures of underlying inflation either declined.
One of those parts of the routine is getting a good quality
Still elevated, as well.
carbohydrate in the morning.
Area remains strong.
It's got to be something that's got fiber. It takes time for your body to break down.
Of the year,
Still cut oatmeal is a good pick.
role of one-off payments and the staggered nature of wage adjustments.
And then eggs. You got to have eggs because they got those fatty acids. Even better, eggs cooked in avocado oil.
Partly because previous sharp falls in energy
Helps.
prices
It helps, I'm telling you, man.
of the annual rates. Inflation should then decline to target in the course of next year.
Getting those omega-3 fatty acids will make a huge difference for you.
By easing labor cost pressures and the past monetary policy tightening gradually feeding through to consumers.
It's so crazy when you start to go down like the deficiencies that most people have.
Inflation
Because
expectations
most people think, well, I don't really have any deficiencies because I'm fat or whatever, so I must be getting enough nutrition. That's not a problem for me. Well, probably the reason you're fat is because you're eating carbohydrates that are too readily available, and you need to increase the amount of fiber in your diet
from recovering
for
as
most
fast
people.
as expected.
So that number one,
This could be
fiber,
amplified by sources
is
of
the
political
most
risk,
neglected
Russia's unjustified
nutrient
war against
in the population, in my opinion.
tragic conflict
My understanding. I'm not necessarily
also disrupt energy supplies and
dietitian or anything like that. Okay,
lower demand for
But
euro area
lack of fiber is the biggest thing.
to a weaker
Okay.
world economy or an escalation
The next biggest thing.
in major economies.
Well, omega-3 fatty acids is a good one, but I think that the next most neglected thing that people have
If the light
is
effects of
magnesium
monetary
deficiency.
tightening turn out stronger than expected.
So the way that you get magnesium is eating really dark green leafy things. Okay, so like spinach.
Easier financing
Have a salad with spinach in it. That's where you're gonna get your magnesium.
consumption and investment.
And you will get more magnesium from having a good quality salad than you will from like a multivitamin. I mean, a multivitamin works too, but
More than expected.
it's much more bioavailable in the plants.
Also stem from the heightened geopolitical tensions, which could push up energy prices and freight costs
So
higher
get your
and disrupt global trade.
get your magnesium.
Moreover,
Then the next one,
events
is the fatty acids.
prices more broadly could
So,
drive up food prices.
Walnuts and ground flax is a good source of omega-3 fatty acids.
May
Okay.
surprise on the downside if low
I say eggs.
concerns about geopolitical
Eggs really are like a superfood.
consumption and investment from recovering as fast as
It's
expected.
crazy to me that
Monetary policy dampens demand.
there was this whole thing about like you shouldn't eat eggs because of the cholesterol in them. Absolute nonsense.
Worsens unexpected.
What did happen? Eggs are a really good source. Avocados are a good source of it too. I mean, avocados give you good fat overall.
Declined since our September meeting, owing mainly to weaker news on the euro area
And that comes back to like for traders,
inflation.
that's one of the things that you might neglect is you're not getting enough
Interest rates
quality fats.
to firms and on new mortgage
I mean, like sure, animal fats,
slightly in
things that are like solid at room temperature.
and 3
You need, you know, those help. You don't want too much of that stuff, but
were unchanged in
the ones that are liquid at room temperature, like olive oil,
the survey after more than 2 years of
avocado oil,
tightening.
just not seed oils,
Moreover, demand
not vegetable oil.
firms rose for the first
But those go a long way.
overall lending to firms.
And in particular, what you're gonna find is that like
Annual rate
you learn faster, you build your intuition faster. That's really what we're doing it for and what we're concerned about, right?
greater competition among banks.
You can't eat too much fat. Okay.
Interest rates and better housing market prospects led to a strong increase in the demand for mortgages. In line with this, mortgage lending picked up slightly.
You know, one of the videos that I've always kind of had on the back burner is like health tips for traders and like routine.
Three key ECB interest
And man, y'all have so many comments about it. I'm like, oh, maybe I should have prioritized that one.
facility rate.
Maybe I should have prioritized that one.
The monetary policy stance is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. We will keep policy rates sufficiently restrictive for as long as necessary to achieve this aim. We will continue to follow a data-dependent and meeting-by-meeting approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial
market's pretty meh about her opening statement, I'd say.
We are not pre-committing to
But we shouldn't get too comfortable here, because there does tend to be a bit of a move. They usually don't make sense to me, but there usually tends to be a little bit of a move during the ECB. Why are you ignoring me? You just didn't really say a whole lot of anything that I could say anything about.
So the first question goes to Alex Weber of Bloomberg. Alex, please.
No need to use capitals.
Good afternoon. Thanks for taking my question. My first one would be on the next steps. So it sounds like you expect to reach a 2% target maybe sooner than predicted in September. Does the decision to
got as high as 07, huh?
shift of gear, do you expect a cut at every meeting for the next few meetings now to be the most likely scenario? And the second question would
Shared very well, okay.
you mentioned trade tensions as a risk, but can you elaborate how you think a return of Donald Trump
Just wasn't really pertinent to
impose tariffs would alter
the things. I mean, like,
inflation in the euro area?
so okay. Well, let me go back. I have a big problem with the whole idea that, like, oh, all of our health problems are really simple. Just don't eat so much food. It's not that simple. Like, of course, the physics of that all are correct. It is energy in, energy out. If you use more energy than you take in, then over time you will lose weight.
Lower.
The problem is that there are so many processes in your body, both physical and mental, that work against that.
Heading downwards as well.
In particular, the sugar, the low glycemic or high glycemic index foods that just convert to sugar immediately and spike your blood sugar. And when you're constantly eating things like that, you're extremely unlikely to lose weight. Like, yeah, probably they eat less and they would lose weight, but if you're eating those foods, you're not going to do those things. It influences the way that you think. It influences your body metabolism in negative ways and all of these sorts of things. So, like, one of the most useful things that you can do is just cutting those sugars out of your diet and adding fiber.
Is a case in point of us being data dependent.
And that alone, for if you just have kind of a mild problem, that alone can kind of like balance you out, and then you will just naturally eat less.
In PMI numbers, so those are really strong elements because of their synchronization,
right,
and the similar direction that we have to take into account those data.
You didn't eat for 5. Well,
that we have made.
Fast.
We are going to continue doing exactly the same thing, and it's clear that between this meeting and the next meeting we have in December, we will be receiving more data.
I go a little bit further. This whole thing with Ozempic, I think kind of shows how like, yeah, it is energy in, energy out, but then it kind of isn't, because it also affects your blood sugar and has all of these other effects on people, and so it ends up being incredibly effective.
In terms of methodology,
Incredibly effective.
it's the same steer, the same.
It really is like, oh man, who knows? Who knows what kind of bad side effects are going to come from it? Like maybe 10 years from now, there's going to be lots of lawsuits. I mean, that's the way that those things tend to go, in my experience, right? But right now, it really looks like a wonder drug, man. I can't even tell you. It's crazy
Of activity going forward.
how effective it is.
Have consumption and investment, but we also have.
And it's crazy how big of a difference in people's lives it makes too.
Restriction, any uncertainty.
Which, by the way, it's gonna get even stronger because Weight Watchers has now made their own kind of version of Ozempic that will be like dirt cheap. So right now it's super expensive.
Also with the rest of the world. So any
Once even poor people have access to it,
barriers,
it's gonna
the
change
tariffs,
stuff.
the
It's gonna change things, guys. Oh my gosh.
On that possibility to trade with the rest of the world is.
Are we gonna go for a new low while she's still speaking?
Thank you. Next question goes to Annette Weisbach of Siemens.
It's not really. I'm not seeing like a super strong trajectory in the volume or anything, but they're just kind of letting it drop through here.
So you were now referring and pointing out that the economy really doesn't really look great, and all signs point towards more downspin. Why don't you go for?
It's because the euro I'm not seeing. Well,
discussed, or whether this
I guess you could say that at the moment, the treasuries appear to be pretty well correlated with the euro. That's true, and the euro is coming down back towards its lows.
Thank you.
But
Thank you very much for your question.
I still not seeing super strong volume. Of course, if it's in currencies, I wouldn't be able to see that. But the other things aren't really showing strong volume right now.
That we have and the indicators that are available has come in a bit below what we had anticipated. But this is not a projection exercise.
I guess the larger thing is I ignored you because I think that you were kind of saying something that was besides the point. The point was, your brain uses a lot of carbohydrates. You need good quality carbohydrates to do what we do.
Three-pronged approach to
Especially, you should be exercising too. Right?
what was on the table and what was debated and proposed by our chief economist Philip.
All this from a comment about Uzi about how I chew my food too much. See what you did, Uzi? You see what you did? We're supposed to be talking about Kamala Harris's interview on Fox.
And
So,
all of that
Uzi said,
debate
I don't think it matters.
that we have within the government.
And I think he's probably right.
At the end of the day,
Like, you're kind of right and you're kind of wrong. Like, it matters only in as much as, like, this is all she's got left. Like the biggest points to change things, to really turn the campaign around for Kamala Harris are behind them.
there was unanimous decision.
Doing these interviews like Fox, doing the Fox interview was probably the best card that she had.
Of the moment in view
Right.
of the indicators that we
So,
and
in that respect, it matters.
assessment of this
But then the thing that I see is that she didn't capitalize on it.
underway and well on track.
Like she did an interview. The leftists like it. The conservatives don't like it. But my analysis is it was a missed opportunity. She did not move the needle.
What is clear to all is that we still have
I think it's funny that Democrats get all mad about a literal single adversarial yeah.
on one that
Well, it really was quite adversarial.
an upside risk,
But like that's the thing.
forecast
So imagine
we are looking at.
if she did the interview and yeah, it was adversarial, but she didn't do as much of this crosstalk, and she actually like answered the questions instead of deflecting the whole way.
In the course of next year,
I think that it would be a completely different situation right now.
earlier,
We would be sitting here going like, oh, okay, Kamala Harris has finally demonstrated competence. Kamala Harris has finally addressed some of the problems dogging her campaign, like why she didn't say anything about Biden's declining mental condition, why she's allowed the border to go uncontrolled, why she's running if she thinks that what they did was pretty good and she doesn't actually want to change anything. right? She didn't address any of that. And see, at this point, the Kamala Harris campaign thinks that the problem is she's just not out in front of people enough. We have to get her out there and do the PR stint now and all of those sorts of things. The problem is that her appearances are not addressing the core problems with her campaign. And when she does an interview like that, that was probably the best opportunity that she would have had to address those things. And she didn't. And so in the end, it becomes it doesn't matter. It doesn't matter. And, I think that Donald Trump's going to win. She didn't answer those questions. She just kind of flipped out, yeah.
And our mission is to
she would deflect. She didn't really answer the substance of the questions. The one clip that I saw that was really elucidating to me was the one where Bret Baier is like, well, a majority of voters say that the economy is on the wrong track. What's with that?
Yes, please go ahead. You're on mute.
And Kamala Harris says, well, but Donald Trump has been running this whole time, right? Because Donald Trump has been running, we can't focus on anything else, right? That was what really killed it for me. That's where I was like, you really, you've got nothing. It's an empty campaign.
Please.
She's not running because she believes something, or there's a situation that needs to be handled and she's the right person for the job or anything like that. She's running because she was the vice president and she's pretty much the only alternative, and she is ambitious enough to take it on. And so you end up with this campaign that's just like brain dead. It's like the cosplay campaign. Like, they do everything to make it look good, but there's no substance. And Donald Trump can just completely capitalize on that, because like he'll lie, like he'll say things like he's not going to impose a 20% across the board tariffs on Chinese goods. He can't. He doesn't have the legal authority to do it. But everybody watching that, they believe that he believes it, or at least that he is running for a reason, and that he has something that he wants to accomplish, and people respond to that.
Look very carefully at in the next months.
So that's how you kind of know, like, okay, well, Republicans thought it was a bad interview, Democrats thought it was a good interview. Who's right? Does it actually help her campaign? Well, the Democrats think that because she didn't just like fall over and she pushed against Donald Trump aggressively and everything, that they love it, right? Oh, you saw it, huh?
And as I said,
okay, so there have been rumors, and I've been hearing it on the news squawk, and I just didn't say anything. But there's been rumors on Twitter that Yahya, I don't know how you say his name, Sinwar, the leader of Hamas, right, was killed in an Israeli airstrike. And it was just like rumors, and there was no confirmation. Now Uzi is saying that he is seeing pictures of the dead body on his feet.
How far, how deep we have to go in order to return inflation to its medium-term target.
Does that actually matter?
What we will do
is the leader of Hamas dying a big enough deal to like move the oil markets, for instance?
In that respect, as I said in the monetary policy statement that I read earlier on, we are not
so the link that Uzi is giving me is still like unverified, but they do look like legit pictures of the guy dead.
Two areas of big concern. One coupled.
Yeah, we got to be careful about that, because
a major conflict.
A picture like that could totally be artificial intelligence. I don't know. That one doesn't look like.
Humanitarian approach beyond the.
If that one is fake, it is
and we are
a higher effort fake, let's say.
Conflict could have on trade.
Like Dolly and
To trade and
Mid-Journey would not generate an image that looks like that.
we are also very attentive to the price of oil that can be impacted. And this oil price is a good segue into your question about China. What will happen in China? What kind of stimulus?
Yeah, like for that to be AI, it would have to be like a custom AI. It'd have to be somebody that's like, okay, let's take a bunch of pictures of people dead in rubble, and then use that to say, okay, here's this guy, make a picture of him dead in rubble. Right, like AI could do it, but it wouldn't be off of like existing tools that you can just go and sign up on a website for and do in 5 minutes. It would have to be a high effort fake, right?
I don't see Olaf Storbeck, but he has
So
problems, so we will return to him later.
I'm leaning towards believing it. I'm leaning towards believing it.
Good afternoon, and thank you so much.
Would that be a market moving event?
Economic growth.
I'm not sure.
Is a soft landing still your main?
I'm not sure.
And is it? Am I correct to see that?
I don't know if Sinwar dying really changes anything.
From inflation concerns to growth concerns. The second,
right? Because the question is, okay, if the market's not moving, is it because his death doesn't matter, or is it because it's not confirmed?
Unobservable concept because we don't know what the neutral rate is, but perhaps maybe you started having a discussion.
His death alone probably not, depends on what impact it has on the price. Yeah.
Where does restrictive stop? So I'm curious if you have any thoughts about where does restriction end and where does.
I'm not sure what you're talking about, Eamon.
Well, thank you so much for your two questions.
Wait, is that
economic growth?
Salim? Is it Salim? So we haven't seen Salim for a while. You know, he's been doing schoolwork.
Is on the basis of the information that we have, we certainly.
But you remind me a lot of Salim.
So the euro area, on the basis of what we have, is not heading for recession, and we are still looking at that soft landing that you have just mentioned. Now, you asked me whether we are more concerned about growth than we are about inflation. I would say that we are concerned about growth to the extent that it has an impact on inflation. And we have to be particularly attentive.
Your words are clear, but like you're not giving me enough context in what you're saying to really understand the point that you're trying to make.
There is, and you pointed to it, that sentence which is...
He says, oil correct the up move, but I can see it go down because of Elon Musk, because of electric cars. And I'm like, okay.
Keep policy rates sufficiently restrictive for as long as necessary to achieve this aim, which refers to the previous sentence, which is, we are determined to ensure that inflation returns to our 2% medium-term target.
It is, yeah.
So, there is no question in our mind that we are currently restrictive. Hence that sentence.
No, it is the death of Sinwar.
That we are not yet at this 2% target. I just want to give you the exact wording, to our 2% medium-term target in a timely manner. And this has to be sustainable. So even if it could well be, as markets anticipate, but they are not always right, that the time at which we reach that 2% sustainably has advanced a bit, but it is not yet now, and we will have to wait further in order to make sure that we are at that 2% sustainable medium-term target. Thank you.
Olaf Storbeck of the FT, I see you are back. Floor is yours.
Hello, can you hear me now?
Yes.
Excellent. Yeah, thanks for taking my call, and apologies, kind of double apologies for not being there in person.
It is, why do they still have so many people on the Zoom call in the Eurozone?
Probably a relatively basic question, and then another one.
Okay, Amen suggests oil prices might rise, but predicts a downturn. He attributes this to factors like Elon Musk's electric cars. He connects this to reduced demand for fossil fuel powered vehicles, similar to how COVID-19 affected.
And if so,
Bayman believes the shift away from oil is inevitable but not immediate. He hints that external events and technological advances can significantly influence oil demand.
Shooting the 2% target.
Well, so
The September forecast.
there might be less oil demand, but that's going to be in the very, very far future. Like we're talking about like 20, 30 years in the future. Not anything that's going to be really affecting the oil market today.
Already shows that monetary policy is too tight. Thanks.
Well, thank you for your question. If anything, I would say that what the numbers are showing at the moment is that our monetary policy is working. And the fact that we've managed to bring inflation down as we have so far, not to complete victory, but to have brought it down so much is an indication that our monetary policy is actually working. It's not the only thing that is operating in that respect, but it is certainly part of the elements to explain that we have moved from very high inflation numbers to much lower and hopefully soon to target on a sustainable basis. So our assessment of inflation as we stand now is really based on
So it's not worth investment? Well, I think that if your investment horizon is the next 10 years, then it's fine.
On inflation now and the potential impact going forward. But that will be done on a strict, rigorous, published way when we have our December projection exercise. And you will be obviously not privy because it will be public, but you will be on the receiving end of those very clear updating. But in the meantime, we are not blind to what happens. And when we receive inflation by way of HICP at 1.7%, when we see core at 2.7%, when we see services moving down to 3.9%, and when we look at the 3 months over 3 month services moving significantly from August to September, all of that put together leads us to believe
The demand for oil will outlive all of us?
on that disinflation.
Well, so here's a thing that I wonder is,
forecast again,
if you get less demand for oil
between
from vehicles, will other sectors pick up that slack? I kind of suspect that could be the case.
We will have a forecast that will be, by the way, extended to 27, because the December forecast always takes one further year into account.
You purchased a Macan? I'm so jelly.
Let's see whether there is a move and in which
Good
direction
for you, Brad.
in terms of inflation, in terms of
I need to get a new car.
in between projection exercises.
As we roll into the second decade of real EV demand, the sheer gravity of having to replace our batteries will start to set in.
To take us closer
Okay, so I think Uzi is making a much
of 2% medium term.
different prediction here that's probably a bit more controversial.
The next question.
I think that he's saying that the demand for electric vehicles will not be as strong as everybody is predicting.
Thank you. I would just follow the
We need hydrogen cars. There you go. I'm totally with you there, Brad. Hydrogen cars. I'm all in.
somehow
There are hydrogen cars now. It's just like there's nowhere to fill them up. Actually, there's. Where is that? Like hydrogen.
which wasn't fully expected or priced in the September. Thank you.
That's a really good question, actually. Thank you. Thank you so much.
Hydrogen fueling stations. Oh no, wait. Is that Canada?
You know what?
Okay, here it
it's
is.
a little bit
So like, there's a few in California,
meetings.
and that's basically it.
They were only 5 weeks.
If there was a hydrogen, if like my local gas station had hydrogen, I would totally 100% get a hydrogen vehicle. There are like 2 or 3 of them out there, right?
Downwards a little bit today. Some of it by way of PMIs, which are a bit softer than hard data, but all...
Everyone ignores the fact that you basically have to buy a third of the car all over again when the battery goes kaput. They're not economically viable. You have to fix that first before the fantasy of widespread EV demand happens. Oh, I don't know about that one, Uzi. It kind of seems to me that with the right regulations and the right subsidies and everything from the government, that people will buy them regardless of if it's actually a very good long-term viable solution.
Being demonstrated by that numbers. But it certainly raised our confidence that the disinflationary process is well on track. But
I personally don't want to get an electric vehicle right now. Maybe a hybrid, but not a full electric vehicle.
Data is either singular or plural, but it's the same word. We are not data point dependent. So it's not because inflation came out, HICP, at 1.7 or core at 2.7 that we made that decision. We need an array of...
I should pay attention more to Loquard because she's a interesting communicator.
work that has been done, and that was...
We're data dependent, but we're not data point dependent.
Press conference in September on the basis of projection. We know that the next 3 months will not have this linear...
The wife was mad for 2 days because he got a Porsche.
Number. We know that it will be higher than that because of obvious base effects.
But did you get lucky? I tell you what, man. That we as people, and I'm not saying this is like I'm giving this addendum at the first because I'm not trying to say that this is an irrational women sort of a thing. This is a people thing in general, are not very aware of themselves. And you can totally have these sorts of things where like outwardly they're really mad about it, but inwardly they're madly attracted to you now because you got the car. Like
if you look at some of the points which you mentioned, that the fact that inflation is going to rise again, if you look at service sector, at food prices, all the effects which really concern the normal people, would you say that the neck is broken or not? And the second question relates to your interesting speech you had to the Governing Council last night.
That's a compelling argument.
Described the admirable economic development.
Well, I'm not. That was not an argument. It was just a theory. So now I'm asking Brad for like supporting evidence. She was mad, but did you get lucky? Oh, you're talking about Amen. Oh, okay.
Well, thank you so much.
No more oil cars. And
Slovenia back to the picture because there's a lot to be learned from Slovenia. So,
I suspect that there will be a period here coming up where EV demand declines a little bit, where the electric vehicle market starts to struggle. You're going to get situations where government, because it's doing so well, governments are less inclined to subsidize it, and some people are going to, like people that got EVs in the past and didn't like it or had problems and things like that. And so there might be a period where, kind of comes back.
So we are
like over the next 5 years, let's say.
Attentive. We know,
but over the long term, I still kind of think that like
we know that we are not.
If the government keeps pouring as much money into that space as they are, that they will eventually overcome the problems and the downsides with it. Like just as an example with Tesla. Okay, so replacing the battery is a big problem for sure. But like, what if most people don't own a vehicle and they're just renting them off, they're just getting Uber rides off of people's automated driving cars, right? Like there's a couple of things that could happen that could like shift that so much.
When it became independent, when it fought inflation.
Probably not worth speculating about, because then that world would be so different. I wouldn't even be able to begin to fathom how it would affect the markets.
Yesterday as well, is that when there is that expansion, when there is prosperity, it needs to be widely shared. And that is particularly the case in times of risk of digital.
Once the subsidies and carbon credits are gone, can they compete fairly? Not right now. Probably not.
It's been widely spread. And where the Gini coefficient of Slovenia is in the...
But just keep in mind, though, like right now, we have big time tariffs on the import of Chinese electric vehicles.
Continue to
And in order for a president to impose tariffs, it basically has to have a national security justification. So the government is saying that the development of electric vehicles is so important, it's a national security issue.
The next question goes to Andres Stumpf of Expansion, the Spanish Daily.
So what do you think the chances are that they're just going to completely abandon
the fact that even
the electric vehicle industry? I think it's pretty low.
And the second question, do recent macroeconomic surprises grant a downward revision on growth in December? Thank you.
October is not December. I cannot tell you today what our December outlook will be and what the projections will say.
But the treasuries did kind of test the lower end of that range, but they didn't really do anything, and they're coming back.
On the basis of that,
I'm still seeing selling in the 5-year though.
you know, I made
Just be ready for a Aramco short. Okay.
Restrictive at the moment at current rate. Even with the 25 basis point cuts, we will continue to be restrictive. And we believe that it is necessary.
It just makes me want to go and buy Aramco. Now, if I was going to buy an oil thing, I don't think that it would be Aramco.
And
no, probably not.
Will come in due course.
Have to go into the whole analysis again, but I don't think that Aramco is the play.
And the next question goes to Spela Mikus of Finance or Finance, Slovenia Daily.
Hi, thank you. You've mentioned you do not foresee recession for the euro area, but at least from Germany, we are getting some worrying data. Is there still a chance that this may turn so that we might see a recession in the euro area? Thank you.
Well, thank you for your question. You know, even with one of the members,
it's just the whole thing is why is that the thing that you're thinking about right now?
What they themselves are producing, it does not necessarily imply that the whole of the euro area is going to be affected in the same way. And based on the information that we have at the moment, we do not.
That's where it's just kind of like, okay, of all of the investment hypotheses right now, why is oil demand will eventually diminish the top of your list?
The automotive sector in particular.
Because in my opinion, the demand for oil is probably one of the least impactful things that could happen in the next 10 to 30 years.
The last question today goes.
What are the things that are going to be more impactful? The impact of artificial intelligence on companies' productivity. Change in battery technologies. And, battery technologies in terms of like the battery that's in your phone, for instance.
You talk about consolidation.
Self-driving cars. I think that could be a really big deal if they ever get there.
Say the same thing just a few days ago. What are the risks?
Like there's a couple there. You're gonna make so much more money on those than like going short Aramco.
Bank consolidation. There's a huge debate in the eurozone. Do you see the bank consolidation?
Boomers aging out of the workplace, and the insane amount of money that's going to have to go into their healthcare.
We now have
That's where the money is going to be.
Framework that identifies the right equilibrium and balance between fiscal consolidation that is needed in many countries and the necessary investment into growth enhancing reforms. And I think it is that balancing act which is the virtue and the value of this revised governance.
Your response does not sound like an actual response to what I just said there.
The time frame of 4 or 7 years, depending on the level and degree of reforms that the member states will propose and will implement. So if those rail guards are followed and observed, we believe that it's the right environment within which to develop activity and from
No.
while the fiscal authorities will...
You said it will take more than 13 years to switch to EVs. I don't know if I necessarily said that, but that was not what I was talking about. I'm talking about, okay, why is the big investment thesis that you're interested in right now that oil demand will decline over time?
I have said that last time around. I think
I think that it will take more than 10 years.
Our view is that
to really see an appreciable change in the demand for oil that would make it worth like going short oil companies.
That the shareholders and the...
But that's not my point. My point is, why are you thinking about that?
We are directly involved, other than through the supervision authorities that we apply to the requests and applications that are filed with us. It is for them to decide how to progress those projects, and I'm not referring to any particular project, as you know. Thank you.
That brings our press conference to the end. The next press conference is going to be...
The end of the press conference. So I'll mute that. Curiously enough, when we look at the yield curve, we are seeing a yield curve that is actually steepening out quite a bit now. So there was a little bit of flattening, but it wasn't very much. And I was kind of like, what's with that? And now we're steepening. That's interesting. That's interesting. So what does that mean? Well, okay, so think of it as like, here's the yield curve, for instance, right? And we can sit down and we say, okay, do we think the interest rates are going to go up or down? Right? So if we think that in the near future that interest rates are going to go up, on the short end faster than over here, then the yield curve is flattening, right? And if we think in the near term that interest rates are going to go down, and the longer run ones are going to not go down as fast, then that is steepening, right? So you look at it as like, okay, what do I think is going to be the impact to interest rates in the short term? What do I think is going to be the impact on interest rates in the long term? In other words, like, what is the Federal Reserve going to do in the next year versus, the impact of all of these things over 30 years, right? How big of a deal is it, right? So if we think that we're heading into a recession, or we just think that interest rates are going to normalize, right? Then that means that the interest rates are going to come down, and probably those short-term interest rates are going to come down more. Hence the steepening, right? So even though the interest rates themselves rose here, and, because the economy is stronger than anticipated, etc., does that mean that we can't lower interest rates as quickly as the Federal Reserve wants to, etc., etc., etc.? But the yield curve is kind of suggesting to me at the moment that it doesn't matter, that they're still going to reduce interest rates anyways. So let's see. I think that we probably still got more to this story today to see where it's really going. I do intraday swing trades on oil. On don't do CFDs. I really hate CFDs. Yeah, I mean, you answered the question. So here's the thing. I think that you are probably ADHD or autistic. That's what I think. That's why I'm asking the question in that way. Because so see, if I had asked that question to a neurotypical person, they probably would have given me some answer about why, in a strategic sense, looking into the future, that's one of the most important questions for us to ask, or why that particular thing is going to make more, or something like that, right? If it's somebody that's ADHD, I expect the answer to be more like, well, I was thinking about this, you said this, and that made me think of this, and made me think of this, and made me think of this, and that's how I came to that. Which is basically what you said. Just kind of, you know, ADHD. Or you don't really have an answer. Like, maybe that's just your special interest, and that's like the only thing that you think to talk about. So that's why I asked it the way they did. It's not like an insult, but it's like it's me trying to sort out how this particular person thinks. I have 4K, not HD. That was a good one, sir. Well played. So you have AD 4K? Is that? Oh man. That's totally ADHD right there, man. Autistic person wouldn't be able to make a joke that good. Why do I have Facebook open? That's weird. So, like, this area right here is kind of, like, not so very interesting to me. It's like, well, it's not I don't think that we could say it's a liquidity hole anymore. Like, we've just been here for a long time, and it's not really doing anything. I think that if we had any kind of impetus, any kind of large order, either way, we would probably be able to move. And the question is just, which way is it going to come? And the 10-year itself is not giving me a whole lot of hints. The 30-year has just continued to be a sell. But that's probably because of the steepening, right? You're going to sell the 30, you're going to, steepening is up like this. So you're going to sell the 30, you're going to buy the 5. But the 10 is probably going to be a little bit more indicative of like how they all go overall. So now the other interesting thing is that ZB is like right on the edge there, right? So it could drag them lower. It could. But I think for now it's probably best for me to just really carefully watch it. I forgot about this. Okay, so Andrew Schultz, he's a comedian. He has a podcast they did with Donald Trump. And he said that like 3 hours after they did the interview, his shows got canceled. So it kind of suggests that they got canceled because he did the interview with Donald Trump. And meanwhile, the big buzz is that Donald Trump will be on Joe Rogan's podcast. Okay, if Donald Trump goes on Joe Rogan, that will be the biggest, most watched podcast ever, probably for a really, really long time. It would be a big deal. Be a really, really big deal. And I kind of wonder, what kind of retaliations would they do against Joe Rogan to try and discourage him from, you know? Yeah, I guess we'll see what happens. And then if Donald Trump does it, then does Kamala Harris do it too? So I kind of think that they would want to at this point. It seems like that the youth, that the younger people in the campaign are pushing pretty hard for these things and are having some success with having a voice in the campaign, and that she would do it. I don't know if it would go well for her though, but I don't know. It'd be weird. How can we benefit from this info? Well, I don't know which info you're talking about, but if we're talking about the podcast, okay, that's probably the last remaining like needle moving event that could happen, barring some sort of absolutely shocking October surprise headline. That's probably the most significant thing that could happen that would affect the election. And the election is going to affect your markets. Okay, so ZB did break there, and it did kind of drag them along. And it looks to me that at the moment that the market makers in the 10-year treasury at the very least were willing to take those orders. But we'll see if they continue to go down. Can you explain that? You mean what I was saying about the yield curve? So when we see something, So when there's an event, whether it is an economic release or somebody at the Federal Reserve says something or whatever the deal is, right? We can look at it from the perspective of how might this affect different maturities of treasuries differently, okay? So if I'm looking at bills, that is treasuries that have a maturity less than a year, that's going to affect those bills a lot, right? If it changes what the Federal Reserve is going to do, it affects those bills a lot. That's like almost the only thing that matters to the bills is what the reserve rate is, right? Okay. It also affects the 30-year, but kind of in a different way. It's kind of like, okay, well, it affects the 30-year because the interest rate is changing, and that change in the interest rate over 30 years like really adds up, and so it affects the price of the 30-year a lot. Okay, the way that we express that is duration. Okay, duration is how much a change in interest rate affects the price of the bond. Okay, so the longest term maturities have high duration, but the shortest term maturities also have high duration. But they have high duration for different reasons, right? The short-term ones, it's because that thing really dramatically affects them, whereas the 30-year it has a high duration because it's 30 years and they all add up, right? But with the 30-year, you also have to consider that like all sorts of other things could happen in that 30-year time period. So yeah, maybe it does affect the value of the 30-year, but maybe not that much. Maybe not that much because, you know, like the economy will revert and, you know, it's not going to be like it is right now for the next 30 years, right? So then you can look at the yield curve. So typically when we graph the yield curve, it looks like this, right? So it's like here are the maturities that are, this is like a 1 year or a 1, a 5, a 10, a 30, something like that. Okay. This is typically the way that we graph it, right? And if interest rates rise, then the curve is getting flatter, right? It rises, then you'd get a curve that looks more like this. And then we call that flat. If interest rates fell and the short-term rates fell faster than the 30-year rates, then you get a steeper yield curve. Okay? Steepening. Okay? So I'm just drawing those pictures because that's what you typically see. Okay? Now we're going to flip it around. Here's the way that we typically think of it. Okay? I reset the treasuries every once in a while, and then I see where they're at. If they look like this, right, this one is higher than this one, then that is steepening. And if it's the other way around, if it's going down, that's flattening. So that's the one thing that you have to remember. Up is steep, down is flat. Okay? The reason you do it that way is because we have this little chart over here and we say, okay, which way is the spread going? If the spread is going up, that's steepening. If the spread is going down, that's flattening. Up is steep, down is flat. So I order my treasuries in a way so that they do the same thing. Up is steep, down is flat. Okay. So what happened? Go back to the chart. It flattened briefly, but then overall we are actually steeper than we were before we started. Okay? So what does that mean? What does that when we're getting steeper? Steeper means that the short-term rates are going down more and the long-term rates are kind of, not going down as much, or they're going up more, right? So you can have it both ways, right? Like interest rates can be going down. Let me come back over here, right? So you can have a bull steepener or you can have a bear steepener, right? Bull steepener would be we're moving up and the 5-year is leading the way. Or we can have a bear steepener, which is what we're having today, where we're moving down, but the 30-year goes faster than the others. So do you see it there on my DOM? The 30-year is down about 4 ticks, and the 10-year is down about 1 or 2, right? Up is steep. So as we're going down, it's a bear steepener. Okay. So why did we move? Well, primarily because of the economic data that we just got. The retail sales was much stronger than anticipated, and the unemployment claims were a little bit better than we thought too, although still high. Okay. So the treasuries moved down, and that makes sense. That makes perfect sense. Okay, if the economy is good, the Federal Reserve is going to have a harder time reducing interest rates. Interest rates are going to be higher for longer, and interest rates go inverse to price. So we should see the price of all of the treasuries move down. Okay, but then if all of that was true, we would also expect to see what? Flattening. We would expect that, okay, well, if the Federal Reserve isn't going to be able to reduce interest rates as much as they thought, then maybe, I'll draw this in a different color, maybe the yield curve needs to go like this, right? But since we can't reduce interest rates as quickly as we thought, the yield curve is going to flatten back out because, we're talking primarily about what's going to happen over the next year, and that's going to affect those bills and everything stronger, right? So we would maybe expect to see flattening, and that's not what we're actually seeing. What we're seeing instead is here was the yield curve before, right? And now what we're seeing is, you know, the yield curve is a little bit higher. Like, right, they all sold. Yields are a little bit higher. But the 30-year is higher than the 5-year, relatively speaking. So we moved up, but we steepened, which is a little bit weird. Now, when we're steepening, that means essentially that the market is expecting interest rates to come down soon, right? Well, if the economy is going strong, why would we expect interest rates to come down soon? We shouldn't. But the yield curve is still suggesting it. So that's why I'm saying the treasuries took a hit, like people had to sell the treasuries there and everything. But the people taking bets in the yield curve itself are still betting on steepening, kind of contradicting the outright move. So the smart money is telling us something about this. That maybe it's not quite what we think on the surface. Because if this was like soft landing, no landing scenario, then what we should see is flattening. We should see flattening. We should see the treasuries move down and we should see flattening. But we're not seeing the flattening. And that kind of makes you think maybe we should be ignoring the absolute move. Maybe we should be paying attention to the treasuries, to the yield curve. And the yield curve is saying the Federal Reserve is still going to reduce interest rates. It doesn't matter. They're still going to do it. That's kind of interesting. This part of the book you recommend on interpreting the yield curve. So some of that came from the yield curve, but what I'm kind of sharing with you here is something very different, right? Like I didn't just share with you a piece of research or anything like that. What I'm doing is I'm looking at the neural network that I have in my head to interpret yield curve moves, and I'm describing that model for you a little bit. Of course, I don't completely understand it. You know, I will make, you know, I will have impressions about what things mean, and I might not completely understand what they mean. But, you know, this is to the extent that I can describe it to you. I'm describing my neural network to you. That's why I'm kind of trying to show you like movement and directions. Up is steep, down is flat. Is the yield curve, is the spread going up or down? And then are the treasuries themselves going up or down? And that gives you 4 different scenarios. And what we're seeing right now, which of those 4 scenarios we're having, what does that possibly suggest about the economic news that we just had, right? So, didn't really get it from the book, but I was able to come up with that because of all of this research I've done from that book, etc., etc. Right? And I'm just kind of giving you the end answer as a shortcut. But it is only for today. Can it paint a different picture tomorrow without any news? Potentially. It's, you know, the yield curve tends not to move that much unless there's new economic data. But if tomorrow we flattened back out and we were even flatter than we were before we started, then that would definitely be something that I would pay attention to as well. You know, so the whole question is, you know, what predicts orders? And what we're kind of saying is this particular event predicts orders, or the orders that actually came out for this particular event. They kind of came out differently in the 5 and 10 year than they did in the 30 year, right? In the 30 year, it caused selling overall. And that's really interesting. And then there is twists. Well, I think what you're talking about is the convexity, and that's an even more complicated thing. So with convexity, what you can get is sometimes you might have a move where the ZB stays here and ZN stays here, but ZN goes down. That's convexity. When the convexity is changing, that has really wild effects on certain strategies, especially certain types of options strategies. But I don't have a very good mental model to explain how you would interpret that stuff or use it. It's not a significant factor most of the time. Look at ZT, yeah. I mean, you can see it in the chart, right? ZT came up. ZB did not. ZB went down, kept going down. Or more importantly, the way that I would look at it, because maybe they didn't actually move, but you'll see it in the volume. Cumulative delta is moving up. Cumulative delta is moving down. So again, we want to know this spread line, up or down? Up or down? Up is steep, down is flat. So if they're buying here and they're selling here, that means your line looks like this. That's steepening. That's how you do it. Because otherwise you're going to be constantly like, okay, so, coming back to remember the original picture that I was drawing, you're like, okay, so here's the yield curve and this one's going this way and this one's going this way. But then we're not doing the yields, we're doing prices. So then I have to like flip it around. These prices went up and these prices went down and these prices went up, and like it just doesn't make sense. Or you're constantly doing these flipping permutations in your mind, which is something that's hard for your brain to do. So what do you do instead? Up is steep. Down is flat. And then all of the charts, everything are ordered in a way so that I can just say, okay, which one are they buying in? Which one are they selling in? Which one moved up and which one moved down? And then I just draw that line and I know whether it's steepened or flattened. And then you can build intuition with it. Then you can come in and you can look at it. And when something moves off of a piece of news and one side moved more than the other, and you can instantly analyze it in your mind, you won't even know how you got it. You will just get that intuition that, oh, wait, hold on a second. We moved down, but it didn't flatten. So I got to be careful about that. And if I do want to take a short, maybe I should take it in the 30-year, because the 30-year is going to go down more, right? If you take it in the 2-year, you'd be losing right now. But if you took it in the 30-year, you made 8 ticks. That's $250. It's not bad. A quarter of a handle, that's not bad. Twist is generally linear moves, bull and bear, steepener, flattener. Okay. Well, maybe when you're saying a twist, you're talking about like operation twist. Yeah. Which operation twist is basically, we're uncomfortable with how flat the yield curve is, so we're going to do some stuff to make the yield curve steepen out. What's your interpretation on the drivers for today's movement? Well, it seems to me that the market is saying that the economy is a lot stronger than they thought it was, but that they don't think that it's going to impact the Federal Reserve intention to reduce interest rates. like at least another time this year. So I tell you, I'll make a guess because I haven't really been looking at this, but here's my guess. If the economy is stronger than we think, but the Federal Reserve is still going to reduce interest rates, then what I would expect to see is a little bit more concern for inflation. So my guess is that in this move that gold and silver is going to be up, maybe. And I haven't looked at it, but now I can come over here and I can look. Okay. So, yeah, they did. They moved up. Right? Right. And you can't do it that way. That's the fascinating thing about it, Obsidian. This is the thing that I'm trying, like, I want to make a video about macro conditions, and this is kind of the thing that is hampering me from being able to make that video, is that all I can do is say, look, here's how you look at and interpret these charts, and here's kind of the shortcut to say, is it steepening or flattening? Here's kind of the background information about why that happens. Now what you have to do is just sit here and watch it every day and see moves and interpret that as it goes. Oh, okay, we moved down. Why? Because the economy is stronger than we thought. But the yield curve steepened. Well, because they're still going to reduce interest rates. Okay, you do that day in, day out, and your mind just kind of builds a model. Because it's not as simple as if else. If this happens, then it should be this, else it should be this. They're like, there's too many conditions. It's too complicated. And there's going to be all of these weird situations that you've never encountered before, and it's going to move in a way. And then there's going to be these other situations where it seems like you've seen it before, but it doesn't go the way that you think that it should. And how do you deal with all of that? You can't program that. Well, you can program that, but like, it's super, super complicated. Like, the number of things that I would have to factor into that model, there's like so many of them. It's just a really hard thing to do. But this is something that neural networks are really good at. Okay. So think of it this way. If there are a lot of inputs into the thing that we're looking at, neural network tends to work better. Okay. Neural network is very good at, so it's either there's a lot of inputs or you have incomplete data. So like a situation where you don't have all of the data, or some of the data might actually be wrong. Okay. That's when intuition works really, really, really well, or there's a lot of inputs. Okay. So what you do is you're just kind of constantly feeding your brain different economic situations and analyzing those economic situations, and your brain builds a neural network to interpret it. And basically what it just does is it says, here's the data, here's what your goal was, and it keeps reconfiguring the network until it gets the goal that it wants, until it gets that reinforcement essentially. And so how it's getting that answer, it's like, we don't understand. It's too like the network is too complicated to interpret and understand how it's getting that answer. But it gets the answer, right? And so you're going to see the move, and if you've built that intuition, you're just going to know. And you're going to have a model in your head that is effective at interpreting and predicting this thing in a way that you don't understand. Wow, more than 100 current and former UK Labour Party staffers head to battleground states in the US. That is not going to help her. That is a little wild to me, that the people in the UK, or maybe Team Harris, think that would help. This is why I love financial markets. It takes a specific type of personality and mind to find this stuff fascinating to be worth pursuing. You know what? I don't know. Wait, what's this other question first? If I'm going to get into that. Talking about programming, I tried to emulate your programming, the bid-ask spread, but no luck. Is there a way I can download it from? Well, I thought I put it in Discord, didn't I? If you get on Discord and message me, and I can pull it out or, send it to you. Okay, so here's the thing, Obsidian. I don't know if it actually is like a specific type of personality or anything. Like the thing is, why am I interested in the things that I'm interested in? Like, both of my sons, so I have one son that's kind of autistic, and then I have one son that's a lot younger, but appears to be more neurotypical to me. And I spent a lot of time with my younger son doing things and kind of nurturing certain interests and things like that, and he wasn't really interested in it. And then meanwhile, Ethan is just absolutely obsessed with everything that I am. Yeah, like, if we turn the TV on, he has to be watching electronic dance music videos. And he really flips out if you don't put on like Sewer Slut and stuff. It's the weirdest thing, right? Why is that? I don't know. In my religion, we believe that all people, that your soul existed before you were born in a state that we call the pre-earth existence, and that you had relationships and that you had development and interests in that pre-earth life, and that the soul is made of something called intelligence, which we don't understand, but I kind of hypothesize as being like something in the quantum background, that you're like taking a combination of quantum particles and combining them together, and that's intelligences, and that makes up your personality, and then you took that with you to this life. Okay, but when I kind of look at things and like things like neurochemistry and how things in my own life go and things like that, sometimes I kind of wonder, maybe it's really just random. Maybe it's just that I had all of my nutrition and everything in the right place. I had the neurochemicals were there on that day, so that when I saw that particular thing, I got the dopamine hit. You strengthen that particular nerve cell, and then it just starts becoming really, really strong, and you want to go down that path over and over and over again. And it's just kind of luck of the draw that, when you were introduced to that thing, you were in the right mood, and that's why it became the thing that you're obsessed with. I don't know. I mean, if that's the case, then we could create it artificially, right? You could take the kid, make sure that they have like a really good meal and everything, introduce the thing to them, make sure that they get the right feedback and everything, nurture that multiple times, and then you could create that kind of interest and obsession for them. And maybe even you could do it intentionally for yourself to say, here are the things that are going to make me money or are going to be useful to me in the world. So I'm going to intentionally create an obsession with it. And the way that I'm going to do that is like, I'm going to wait. Like, I know my own cycle. I'm a little bit kind of, low today. Maybe I skipped a meal, so I'm kind of hungry. And then I just had a really good meal. So now body's going to be making all of those chemicals and everything. Body's in the right space. And then I go and I do the thing, and it reinforces it in your brain. Did you just promote the idea? Yeah, I did. Well, I don't know why you were bringing it up then. When you're talking about, when I was saying like building intuition, yes, when I talk about building intuition, I am basically promoting the idea of discretionary trading. I am suggesting that in order to build an edge that is difficult to reproduce and that is competitive against robots, that probably the best way that you as a retail trader can do it is by developing trader intuition, which means that you have built a complicated and sophisticated neural network in your frontal cortex that is able to answer these questions in a way that the robots can't, because they just can't. Like, we've kind of found ways, like an LLM is kind of like duplicating human intuition, right? But how do you get all of that data into the LLM? How do you give that reinforcement to the LLM? That's really hard. We don't have the resources. We don't have the stuff to do that. And so most most trading robots, not LLMs, but just trading robots, aren't able to factor that sort of stuff in. And so you can still get an edge with it. But in order to do it, you're gonna have to basically be discretionary trading. And kind of the corollary to that, and this is kind of what I'm talking about in one of the videos that I'm developing right now about intuition, the corollary to that is that you kind of have to ignore the things that you know don't matter, or that are not useful to building that intuition, like spending a ton of time analyzing chart patterns. Doesn't help you, just ignore it. What do you think about psychology prices around rounded number, like 6, 8, 2? Well, I don't consider 6, 8, or 2 round numbers. Round numbers would be like 0 and 5. The more zeros and 5s are in it, the more round of a number it is. And there is a substantial amount of research that shows us that for some reason, liquidity tends to get placed at round numbers. And so much so that, like, we've even programmed it into the robots for the robots to prefer to trade round numbers because of this kind of mental bias in humans to prefer round numbers. Is that the idea of consciousness exists in all matter? It just needs to be, well, okay, yeah, maybe. So I think that a more direct explanation of it, though, would be that consciousness is a property created by quantum things in the quantum realm. Consciousness is a quantum phenomenon, essentially. And then yeah, you can start to get into all of this sort of mystical pseudoscience stuff that is like, yeah, like consciousness is everywhere, and the earth has a consciousness or a soul, and things like that, which are really, really interesting topics, but are a little bit too far off the path for us. You're getting into things that are not so useful to us, right? The reason I brought it up was only to kind of show you what are the two theories. Well, one theory is that's just the way that you are, whether it's that it came from the pre-Earth existence or what, or the other one is that it developed because of your experiences, and it's just kind of innocuous things that create that, so that you don't even realize it. But that, and so in that respect, it can kind of become completely random. That it was just introduced to you at the right time. So how do you use that? Well, either one, I can foster these interests in myself, or two, I can go forward with the confidence that, like, I was born to do this, that, like, I came into this life with the intention of doing this thing, and now I'm doing it, and that's why I'm drawn to it. And you can take advantage of both without having to believe or reject either one, right? Is consciousness a product of matter or vice versa? Well, if we're talking about quantum stuff is still matter, right? I'm also giving you some insight into some of the more esoteric things of Mormon theology. Right. So Mormons believe that spirits are made out of matter. It's just more fine and pure matter that your eyes can't see. And that is why, like, people like Moses, when he saw God, were transfigured. That their bodies were actually changed so that they could see these things. That's when it gets into really wild stuff, right? So I'm asking about the reason, not the rounded. It's because it's a mental bias in people. People like round numbers. Why do they like round numbers? Because that's the numbering system that we use, right? This is like, well, it's in tens, right? Every 10, then you add another digit, and half of that is 5. And, more things are divisible by 5. More things are divisible by 2. And so people tend to prefer numbers that have 0, 5s, or even numbers. And well, you tell me, all people are prone to this. And so even professionals, and it's become a thing, and it's even been programmed into the robots. But I'm also telling you, do retails move the market? That's a different question. The answer to that is yes. All orders move the market. All orders have some degree of impact. This idea that, like, what you do as a retail trader is completely irrelevant and the market maker is completely in control and basically makes all of the decisions about where things are going is not backed up by the literature. The literature that we have and the science and so forth says that all orders have impact. So, of course, a big trader out there that's trading, buying something, is going to cancel out your small impact of selling something, but every order has a measurable impact. And more so than that, it follows the square root law. So what does that mean? That's what the graph of a square root. Okay. Oops, let me try it better. Right? Square root law is like this. At first, it seems linear, but then it's not. Kind of curves. Right? And the way that the formula for it would be the impact let me draw it all nice here. The impact of an order of size Q is equal to Y, which is a scalar unique to that instrument, times omega, which is the average volatility of the instrument, times the square root of the size of the order over V. Yeah, I understand that, right? Consciousness, no, that we don't, that's a theory. I don't think that we have enough. I don't think that there's any real scientific evidence to explain consciousness. But there's a lot of people on the internet and everything that think that consciousness is like created by the quantum field and all of these sorts of things. I don't know what you want. Quantum field is probably not the right term, but like things that processes going on a quantum scale. Okay, anyways, what if we were to say, I want to trade 1% of the volume. So I'm going to replace Q with 0.01 of V divided by V, right? These V's cancel out, and now we get the square root of 0.01. And what is the square root of 0.01? It is 0.1. Okay, so what does that mean? 1% of the volume can be responsible for 10% of the movement. That's what it's saying, right? So you get I like to draw it all out. Yeah, I of Q is equal to Y O times 0.1. Okay, so 1% or 0.0. Let's get rid of this Q, and it's 0.01, right? So 1% of the volume is responsible for 10% of the movement. So the reality is that on a per contract basis, your orders actually have more impact on a per contract basis than the big guys' orders do. It's just that the big guys have more orders, and so all of their orders together, it has a much stronger impact than yours do. But on a per contract basis, it has a stronger one. So the result is that small changes actually have a really big impact on the thing. That's what a square root law basically means. Square root law basically means small things actually have outsized impact. So yes, what you as retail traders do does matter actually to the markets. And there are situations, probably situations every day, where the combination of the retail traders, doing a certain thing changes the way that it moves. And that if you had a time machine and you could say, here's a normal day, and then here's a day where we have all of the retail traders don't trade, you would see the market behavior would be different. Less market, no. That's not correct. So, here's our formula again. That was actually a good question. That shows that you're paying attention. Okay. So, this Y, where does that come from? Well, what we do is we go and we execute a meta order of size Q. And then when we're done executing the order, we look at what the volatility of the market, or how much we moved it, what the average volatility of the market that day was, and how much volume traded during that period. We have all of the variables except for Y, and then we calculate Y. Okay. And what institutions do is every time that they are executing a block trade, they are tracking that Y. So they have a database of Y values, essentially, for each instrument to know what it is. And what we have found in general, and there's a research about what goes into Y, okay? But to be really, really general about it, less liquid markets have higher Y value. So a really, really thick market like ZN is going to have a Y value of 0.5, and a market like Bitcoin is going to have a Y value of 2 to 3. Okay. So that means that actually the impact from those small orders is actually larger in Bitcoin than it is in other instruments. And that is why Bitcoin is so wild. If two traders use different brokers, do I benefit from the losses of the other traders? And would one broker, that has nothing to do with the brokers. The way that it works, the way that a futures market works is that everybody puts money into a pot, and then the people who were long when it goes up, they make, they're given a certain amount, and then the people that they lose a certain amount, and all of the winnings come from losses from somebody else. But it kind of all gets pooled together, but yeah. But that is all handled by the exchange and the clearinghouse. Is it called the clearinghouse in futures? I forget what they call it, but it's a zero-sum game. So why it being called a zero-sum game, why does that matter? So there's all this research that is game theory and stuff like that, where we say, for instance, what if we have a game of rock, paper, scissors? and we draw a triangle like this, and this is rock, paper, scissors. And which strategy is more dominant right now? And, you know, you kind of get this weird chaotic system that will, if you get the rules set up right, that will kind of go in this circle, you know, where paper will be dominant, rock will be dominant, scissors will be dominant. And some of the things that you can change about this game is, for instance, what the reward is, right? When you win, does the other person lose? Or is it like when you win, these other people also kind of win as well? Because that changes the strategies that they use. And what we find in general is this, is that when you have a game that is a zero sum, they are more competitive and more chaotic. More competitive and more chaotic. So what is the picture that I'm trying to paint for you here? Markets are this extremely random, chaotic system that is naturally that way by the very properties, like the very rules of the game. And every tiny little decision that you place into that has an impact on it and can have dramatic, long-reaching effects on how that instrument moves. So on one hand, it kind of so there's kind of two consequences from that. One is markets are really random. It's really difficult to find a real actual edge on an intraday time frame. Very difficult to develop real edge. Can happen, but it's extremely difficult. Then the second thing is that the market is extremely competitive. So every little decision has an impact. So you can't just grab a strategy off the shelf that you found on the internet. You can't just go and, look at a signal service or something like that, because those are all going to have impacts on the market and reduce the efficacy of those strategies. So you have to develop the strategy on your own, essentially. That's what that means. Now that you are armed with those facts, right, knowing where to look and what kind of strategies are you going to work or not work, right, this is going to go a long way towards helping you filter. Like, you're going to dig in the right spot. It's kind of like saying, if you want to go and dig for gold, where do you go and find gold? Well, there are certain types of rocks that tend to be found in the areas where there's gold. Like, those are the more common rocks that you can see, and it will kind of indicate to you that there's gold there. Gold is heavy, so it tends to get deposited in like the bends of streams, and especially places where like the dirt or the rock there is very, very dark, right? When you know all of these things, you kind of know a little bit how to dig, and that's what I'm trying to tell you is here's some information to help you know where to dig. Don't dig where everybody else has dug, because the gold will have already been mined. You like it, CFTs? I really contracts for difference. There's a reason why they're banned. Let's just it's still surprising to me that they allow them in Europe, but whatever. Yeah, if 90% of traders lose, you need to do something different. Yes, but like also understand that 90% of traders lose also because it's just like inherent in the game. Like, most people will lose no matter what. No matter what, most people will lose. If we lived in a world where everybody knew the stuff that I'm teaching you, then it wouldn't be an advantage. And, people would still lose. It's a zero-sum game after all, right? But I guess the other thing is it does kind of have to make you think about like what actually is an edge. So for instance, there was this thread on Reddit the other day, and they're like, what is an edge that you think works? And specifically, like, I mean an edge, like when this moving average crosses this moving average is this thing. So I really loved the thread because I was like, oh, cool. Here's all of these things that I can backtest and prove don't work. You know, what is going to be an edge that's actually going to be lasting? Well, I give you an example. Because why am I willing to tell you all of this stuff? I'm willing to tell you all of this stuff for two reasons. Number one, I know that most people won't get it. Most people won't get it, so it's not really a disadvantage for me to teach it to other people. Like, I think that teaching it to other people will help people understand the world and the markets better and can make some real significant changes to society, because if we understood markets better, we would make better decisions. Society would be better off, right? But I don't think that they would compete with me, because I don't think that most of them will understand it on that level to compete with me. And for those few that do, those are people that can assist me, because the reality is that what I'm really doing is I'm building a trader intuition. And so I think that me and my team being you guys here in chat, I think that we can do it better than other people can. I think that because of our understanding and our approach and our developing the intuition and things like that, I'm willing to put it out there on the public so that I can recruit other people to assist us, and it won't affect our edge. And why won't it affect that edge? Because we're doing something that is very hard to duplicate. You can't just read a PDF and then you know the pattern to look for and trade it. No, what I'm talking about is way more sophisticated. What I'm talking about is following a process day by day for years and building structures in your mind that help us make decisions better than other people. You can't just copy that. That's a real edge, right? It's just like if you're you're a electronic trading firm. If you're an electronic trading firm and your edge is that you're really fast, you have all of these things in your systems and so forth that make you faster, make your orders get to the exchange first before other people's. That's hard to copy. I do not have the ability to submit orders as fast as that electronic trading firm, right? That's real edge. Hard to duplicate. And the only real edge, the only real two edges that I know of that you can develop as a retail trader that are real edge, that are hard to duplicate like that, are 1, intuition, and 2, being informed. If you know what's going to happen today, you have information that not everybody else in the market has. And I'm not saying do insider trading, okay? But there is information out there that can be public information or that you could have and is legal for you to trade on, but not everybody has, okay? And that's a real edge too. Those are the only two that I know of. Oh, there's Nancy. How are you doing today? Hey, I saw your comment. I didn't respond to it, but I saw your comment on that video. And I've always wanted to do a video about quote unquote support and resistance. But in order to do that, we would have to have an indicator that we can agree is an effective measure of where support and resistance is. So there are indicators out there that try to do that. You just have to agree on which one it is and then do the backtest and everything. And we could do it. But I appreciate it. And you left a comment on the video and that all really helps. And I really appreciate it. How much time do we got left? Oh, we still got 20 minutes. Well, when we pushed to those new lows, the treasuries kind of went dead after that. I'm still seeing a decent ebb and flow though, so they could probably continue to move. Maybe we could move down a little bit more. The one problem will be is that, like, if we do move down more, it's not going to be as big as, you know, the one before. Like, as time goes on, the moves just get less and less and less. Is it going to rain today? It's awfully dark outside. I take all manual trades. You know, I have robots and I've developed things and stuff like that. One of the problems that I have is they'll be like, hey, let's start back testing, or let's start live testing this robot. And then the weekend goes and Monday comes along and I forget about it. So. Is it really supposed to rain today or something? Let me come in here. Where's my weather? Weather. Oh, yes, that's right. So a little bit today and then colder tomorrow. Interesting. What do you think about my tools? Which tools are you talking about? I have tested some of retail strategies on order block. They take some sort of order block like supply and demand, but it does not work. Sometimes it feels, yeah, well, that's always the way that it goes. Do you have a NinjaTrader coding video? Yeah, I do. So you know what, this is another thing. So what I have is I have a video that's like, okay, here's how you use the debugger. Then you have another video that is like, here are the key functions, or here are the key parts of a NinjaTrader indicator. And then I have another video that is like, here's data structures, like if you want to do order flow stuff. And then I have a bunch of other videos that are like backtesting actual strategies and showing you the logic of how you do it. And the intention is you watch all of those videos, and again, it's the whole intuition neural network thing, right? Is now you're learning by doing, you're learning by example. I'm giving you enough information that you should then be able to go and look at like other people's indicators or the indicators created by NinjaTrader, understand how they work, modify them, and then eventually you graduate to the point where you're making your own. Because I don't really have the time or necessarily the skill to make a video series that really teaches programming at a deep level. Like, here's what an if statement is, and here's how it works, and all of that. You know, that's too detailed for the time that I have right now. Although I don't know. So yesterday, I was crashing hard yesterday. I think part of it was that I just was not eating as well. I don't have much oatmeal left, and I was kind of rationing it. And I need to make my bran muffins. Bran muffins, another thing that I like to eat that is like a good quality source of carbs. And so I was crashing pretty hard yesterday, and when I crash, I get kind of negative and down, and I wouldn't say depressed, but like it's hard to work and stuff like that. So like I wrote stuff, and the next video that we're going to make is going to be the one about misconceptions. And that one is actually going to be 2 videos, I think. I decided to turn it into 2 videos because one subject in there was so big that it was just enough to be a video on its own. So we'll do that one and the other one, and maybe we can record those tomorrow. Maybe I'll be able to have it out by Monday. I guess that should be the goal, and if not, the Monday after that. And then I think the next video that we're going to do is the one about combines. Sorry, the one about funded trader programs. I kind of got like all the stuff written up for explaining the statistics and everything, and I'm kind of not sure where I want to take it from there. So that one needs a little bit more time. And then I have like 80% of the intuition script written. So I'm like ahead by like 3 videos now at this point. And I was kind of getting bored of writing. So I am coming to the point where I'm like, it's time to start doing some programming and stuff like that. So I started looking at that. One thing that I do really want to do, and I think I just want to prioritize it, and even though it's not necessarily the most effective thing, but there is some stuff with my indicators and caching and backtesting on caching that I want to address and or test and do some things with. And then we could start doing these robots again. So that's one thing. But overall, I'm kind of getting to this point where it's like, like nothing actually sounds fun. It's like, well, is this the same problem I keep saying with Kamala Harris? Maybe this is why I keep coming back to this thing in the political analysis, is like, what can you actually do to move the needle? Like, I made this video, are index funds evil? Well, it didn't perform as well as I wanted. But you know what? Like, the video didn't come out as well as I wanted. Because I look at it and it's just like a talking head video with like a few little pictures here and there. It just doesn't move the needle enough. And I don't really think that I can really do a really good, well-edited video with like all of the animations and things like that. So it's just like, what can I do right now to really move the needle? I feel like I've got this time, I could be doing anything, and I could be doing something super, super effective, but I don't know what it is. I don't know the thing that would be the game changer, that would move the needle. You know what I mean? So I'm kind of stuck right there right now, and basically what I'm ending up doing is like, well, I had the plans. I'm just going to go through and follow on the plans, because following through with the plan is better than nothing. A lewd thumbnail. There you go. That's what I need. I actually find that a lewd thumbnail doesn't help as much as you'd think. I think for that video, the thumbnail might be okay. It's maybe too dark, so maybe that's part of the problem. But I also think that it doesn't have enough good keywords in it. Because I'm really trying to tap into the, BlackRock conspiracy theories thing. But maybe I shouldn't be trying to do that. Maybe that's going to be suppressed by YouTube. I don't know. Okay, I'm a beginner in trading. Do you think it's possible to succeed nowadays with order flow or treasury bonds for beginners? So it is. You're going to need more than just order flow and treasury bonds. You're going to want to look at for things, like have information that not everybody has about, what the economic releases today mean. There's all sorts of information that you can have that can kind of give you an advantage, right? But you're probably going to need those things. But even with all that, this is going to be super, super hard. But the thing that I want to focus on in your comment, I only have about 5 minutes left, but what do you mean by succeed? Because how you define success is probably the biggest factor behind whether that's true or not, right? For me, success is I can continue to come here every day and trade and do live trades and continue to trade. That to me is success, okay? We've been incredibly successful, right? I'm not going to make a living from it, though, right? Like, I would actually, just recommend against trying to make a living from trading. It's not a very good lifestyle, and it's kind of hell. I wouldn't recommend it. The next trade determines whether or not you eat. That's tough, man. You don't want to do that. And some people think, well, yeah, but I can still make a couple $1,000s from it, and it will give me financial independence and all those. Probably not. Day trading is a really good, it's not very good at building wealth. What was the word that I wanted to use? It's a good wealth enhancer. That's what I was looking for. Day trading can be a wealth enhancer, but it is not a very good wealth builder. So that's why what success means to you is very important. So if your approach to this is because the monetary incentive, then walk away. Just walk away now. Go and do something else. Go become a plumber, I guess is the thing now. Guys, don't know. Yeah, if you haven't already, trade Sim for a while and see if you can work it out without throwing your savings away. One of the things that I do plan on getting into in the prop firms are for suckers. That's what I want to call the video. Prop firms are for suckers. One of the things that I kind of want to hit on in there is there's a 30% chance that you can pass the trader evaluation. So if you've been paying for trader evaluations for like 6 months, you've done it like 6 times and you're not passing, that kind of means that there's like negative edge to what you're doing. Because if it was just random, you would probably pass 1 out of 3, 1/3 of the time, 1 out of every 3 tries. So like, it's a way to give free money to the market or broker in case CFDs are problem. Well, like this is what I said. Like I generally pay for my like my data fees and things like that. So I'm not losing money from it. It's just like, I guess it's kind of break even. It's I guess one way that you could put it. But the way that I think of it is I can keep trading, and I'm trading live, and I can keep trading, and that's what I care about. You said, yeah, but you're not. See, what's happening here is you're so ADHD that you're not paying careful enough attention to what I'm saying to be able to say things that are relevant enough for me to go, oh, yeah, and then go off on a whole big thing about it. Like, I think you're saying accurate. Like, let's see, what did he say? Oh, like, so for instance, Barb, you even see buyers and sellers and entered and you're still not sure if they keep the action or no. Second thing, buy or sell volume. You don't know if you're entering or exit the market, right? So like he asked, is it, can you still be successful trading treasuries or with order flow, right? So what, it has like almost nothing to do with what he asked, right? You're ADHD. You're very ADHD. So that's exactly the type of mistake the ADHD person will make, is like, right? Because we're kind of using intuition. ADHD person doesn't realize here are all of these things that should be placed into your intuition, but because you weren't paying attention, you missed it. And so you don't even realize. And I know because I was like that. Hope that's not too harsh. Some ADHD people is like, oh, okay, yeah, that makes sense. And you go, some ADHD people that can be crushing. I'm not trying to crush you, okay? So once you really start to look at this and understand that, even if you're not medicated, it can make a huge difference in your life, okay? So I'm giving you something that can really, really help you. Man, for this last like 30 minutes of this market, the ZN is literally just stood still at 0.2. That's really interesting to me, that it went that dead. I mean, that's the way it tends to go. But it really seems to me like that people abandoned this market. It was like, okay, there was another little move post ECB press conference, and now they're not interested in trading it anymore. which is a little wild considering that, like, you know, ECB press conference and retail sales were like the biggest things that we got going this week. I don't really think there's anything more to come. Octavia says I'm in the trade from hell. Oh, if you're like stuck in a position at O2, like, oi, I would just scratch it and end the day. Because I really don't think it's going to go anymore. Okay, there's our stop. I wanted to double check here. Okay, anything tomorrow? Building permits, housing starts, that's it. I don't know. The market is kind of a little bit quieter than I feel like it should be. But when it gets quiet like that, and then I look at what we've got on deck for next week, and it's kind of like, well, this is just as bad, if not worse, as this week. So will it really be that quiet next week? So maybe we are really running into, well, wait, how many days do we got until the election? It should be the 5th, right? Let me see here. Election day 2024. 5th, yep, it is. It's always the first Tuesday in November, so that would be the 5th. So that means that it is, and what's today? The 7th? 18th? Oh, I got the wrong here. It's October 17th. There you go. Yeah, okay. So we got 1, 2, 3. So it probably will be 1, if not 2 weeks, really relatively quiet market. And then the election. Insanity. Wait, one other thing is, since the first Friday of November is the 1st, will they push back the non-farms? No, they will not. Non-farms will be on the 1st. That sets things up really interesting. So you can't see my calendar over here, but basically, like, we've got this week, we've got next week, and then the first week in October, this is non-farms, and then you've got election day. So it's basically like we might just have 2-3 weeks of not really doing anything, and then all of a sudden from here to here, markets are probably going to be just like absolutely bonkers. It's coming close, boys. See what happens. Things are kind of shifting for me a little bit. I'm still looking for a job. If the next set of ones don't turn out, then we're probably into the holiday season. It's going to be tough, but I think that I will still survive, so it'll be okay. Guys, it's time for me to get going. I will talk to you tomorrow, Friday. In the meantime, stay excellent, team.